Hey traders, checking in on the stock market today. So the tech sector bulls showed up first thing and they kept complete control for the the good part of the day. At the end of the day, we rolled over into hourly consolidation. A little bit of bear volume behind that pullback, but essentially this week is going to be very key as to whether or not bulls can confirm daily trend changes or not. If they fail, it's going to have very significant implications comparative to if they confirm it. That's just FOMO and fear is pretty much the two different scenarios that we're going to get. There was also a shift in correlations today, and I'll point out what I'm observing in just a moment. So here's the S&P 500 futures chart, and I'm going to be using these futures charts more this week because we have dividends being distributed, so that changes the levels artificially. It was with SPY last week, today's with QQQ. We're also going to have it with IWM, XLF. All of these ETFs have it. So it's my least favorite time of the year when charts get screwed up in the short term. But looking at the S&P 500 futures, we got our daily high or low set, and the bulls are attempting to make their way back to the all-time high. As we talked about last week, the most ideal scenario, if we're going to see weekly consolidation in the financial sector, spoiler alert, that's what we're seeing, we need to see QQQ bulls change the daily trend to see that rotation going on. Weekly consolidation in XLF, bounce follow through in QQQ will offset each other and it'll keep the S&P 500 strong. We know there is fear when all of our major sectors are going down at the same time, and so bulls want to ensure that's not taking place. So worst case scenario for the broader market would be QQQ failing to change the daily trend and XLF continuing weekly consolidation. So daily high or low set, and that low of Friday is now a key short-term support level that the bulls want to maintain. The NASDAQ futures chart, same thing. Daily high or low is set. And just looking at QQQ, the end of the day pullback, a lot of bear volume behind it, absolutely. And it looks like we fell off a cliff. But look at the bull move to start the morning. And it was just sideways, inability to break resistance, and then it was rolling over to say, all right, hourly consolidation underway. And you look at the low of the day, the high of the day, and the hourly consolidation into the close, there's no major red flags. It was definitely more bear volume than the bulls would like to see, but it is still a clear hourly uptrend at this point. So the NASDAQ, daily high or low is set, and again, this week, it is either confirmed daily trend change or anything else is a disappointment for the bulls. And if we were to fail that level and drop down and break the low of Friday, big red flag, and we're then looking back down at the low of the dump and fear starts to creep back in. If you change the daily trend bullish, a lot of fear continues to be alleviated. We've been alleviating that fear all the last 2 weeks, have to follow through with the trend change. Anything else, and the bulls consider it a failed week. So for QQQ, that support level is relevant because the dividend, actually no, I take that back. Dividend was distributed today, so that level of 309.66 is not as relevant. What I mean by that is the NASDAQ futures would break, I should say QQQ would break the low of Friday before the NASDAQ futures would, because again, QQQ artificially lowered its price to distribute the dividend to shareholders. IWM, still trying to find the daily high or low. Today was just an inside bar. The inside bar would have to break bullish tomorrow for our daily high or low to be set at 222.95. Anything less than that, and we're still consolidating and still scouting that high or low. And again, if we're looking at our fib retracement levels, we're watching to see what is most likely, continuation or equilibrium. And we're starting to get to that 382 retracement. If we see another leg down, it's going to be a 50% plus retracement, and that's when we start looking for the equilibrium to be more likely. If the bulls can break this inside bar bullish, daily continuation remains on the table. So inside bar on watch tomorrow. Financial sector week. So we left off last week watching. We said, okay, we have the same weekly setup on XLF, XLE, and oil. XLE and oil have started weekly consolidation. I'm watching for XLF weekly consolidation. And we've seen beautiful follow through the last 2 days. I entered short Friday morning first thing, and I've now shifted my perspective where, if you've been watching these videos, you know over the last couple of weeks, I've been hedging my long-term portfolio bullish exposure with QQQ short because QQQ has been weaker. That's changing. So now I'm favoring XLF short for my protection plays. And I have less QQQ shorts on after such a bullish day today. So again, that's just me constantly rotating to ensure that my longer term positions do not drop my portfolio down too much. I want to always keep one step in front of the other and keep that all-time highs of the account coming. So what do we have now for XLF? We've got a clear hourly downtrend. Bounce today, hourly lower high at 33.78. And we are looking for a weekly higher low. There's tons of space for this weekly higher low to form. So short term is bearish, but midterm definitely bullish, scouting that weekly higher low. We could see another couple percent drop, another 3-5% drop, and still be looking for a weekly higher low. So the hourly downtrend will be our short-term guide, and next time we bounce on the daily, we will be scouting a daily lower high compared to 35.29. But a clear hourly downtrend in the short term, and I believe that's 2 gap downs in a row. Open 33.82. Yep, 2 gap down opens in a row, and we'll see if the bears show up again for a 3rd gap down open, which is a bullish reversal pattern to be keeping an eye on, which just means bears get overextended and scout a bounce. But weekly consolidation underway. Healthcare bulls are standing out. That's a daily bull flag on the verge of confirming. The high of the bounce, 115.72 and 75. It's a triple top, and we closed right there. And again, dividend distribution, without it, we'd be higher. So it's a daily bull flag attempt, and we're seeing rotation, and the rotation is leaving energy and the financial sector, and it's going back into the healthcare sector. And if QQQ was this strong, we'd be breaking to a higher high already, which we're not. So XLV and XBI trying to lead the way with the daily trend changes. Keep in mind that with XLV, even with the daily trend change, anything under 117.54 would just be a weekly lower high. Monthly higher low trying to be set. That's a monthly bull flag in the healthcare sector. So daily trend change, just a little bit of follow through needed to make it convincing. And then the bulls hoping for a weekly trend change to take place into April. And that would have us looking right back at the all-time highs. So again, I view things in 2 different mindsets. I view things in number 1 mindset. What do the broader market bulls, just in general, what do market bulls want to see happen? And it's rotation, which is what we are seeing. And then I zoom in into specific sectors. Okay, what do bulls and bears want on QQQ? What do bulls or bears want on XLV? And as of right now, there are no red flags on the broader market as a whole. The tech sector is still a little bit iffy, has some proving to do, but as far as the S&P 500 is concerned, it's just fine. Again, we need fear with all of our sectors dropping at the same time, and we just haven't seen that since early March. It's been 3 weeks since that happened, and it feels like an eternity ago. So XBI, bulls need to see a break of 149.24 to confirm the daily trend change. From there, we zoom out and scout a weekly lower high with tons of space, anything under 174.79 for that weekly lower high to form. This helicopter is way too low. Jerk. So we're looking for a weekly lower high, anything under 174.79. But we have to change the daily trend first. Not scouting a weekly lower high until we see the result of this daily trend change attempt. And our new most important level, any name that has convincingly set the daily high or low, if we lose that this week, big red flags for the bulls. So 140.18 is a must hold for the rest of the week. XLV, 114.03 is a must hold for the rest of the week. SMH tried to change the daily trend, but the tech sector pulled back into the end of the day, disrupting that attempt. 242.58 resistance, so less than $1 away from that level, and the bulls just hoping this is an hourly high or low, and to give it another chance tomorrow, if we break 242.58, we confirm the daily trend change, and we zoom out and watch for the potential of a weekly lower high. Solar sector, very weak bounce. So a shift in correlations today. We've been watching our laggards over here with oil and energy and all that, and our tech sector over here with QQQ, and it's been EV names, solar names, MJ names, and that changed a lot today. where we're seeing Solar and MJ a lot weaker than QQQ. They did not participate in the bull move at all. And it's also notable to me that Bitcoin was seeing a lot of red, where Bitcoin's had a bullish correlation with the broader stock market over the last 2 weeks. And that changed today. So just a shifting of correlations. And again, you can see sector rotation where everybody correlates, and then you can see intersector rotation. And today just tells me that bulls were buying big tech, Apple, Netflix, all up notably, and not buying Solar or MJ. The EV names had a little bit of a weaker correlation this morning. NIO closed red. And if you told me over the weekend, hey, QQQ is going to be up 2% on Monday, I would say, all right, EV names are probably going to be up 3 to 5%. And NIO closed red today, almost down 1%. So it's notable short-term shifts in correlations on the sectors that have been following QQQ significantly over the last couple weeks. So TAN is definitely one of those. This bounce on TAN compared to what QQQ did today, very big difference. So not ideal for the bulls. I would call that a bearish correlation with QQQ. So what are the odds that the TAN bulls can break 99.16 and confirm a daily trend change? It's going to take a lot more work for the bulls to pull that off. And worst case for the bulls would be a failure and then a break of 86.01 to be looking right back down at our low. So on names like this, it is much harder for the bulls to change the daily trend, especially if a big bull day on QQQ is not going to help much. And MSOS is the same thing. It closed at the low of the day. Again, very similar to QQQ. Today, very different. Pretty much inverse. So MSOS has to form a higher low compared to 40.80, but that may be our weekly lower high being set. Have to prepare for all scenarios, and some sectors standing out much weaker today. The VIX is a potential daily bear flag. We're right down and already dropping to a lower low. This is the lowest level since COVID. So a clear daily downtrend. And the next level we're looking at is pre-COVID. There's a gap at 1820. And our new daily lower high is 2320. The dollar. So pretty much a daily inside bar. Not a lot of information in the short term. And I'm just sticking to the weekly chart for clarity. Have we set a weekly high or low? Can't say that we have yet. If we break this double top at 92.17, then we'll say yes, the weekly high or low is set, and we'll look to the high of the bounce from there. And whether you're a gold bull or an asset bull, you want to see a bear break of 91.30 for more significant weekly consolidation, because this weekly consolidation at this point favors continuation. So gold's got a 6-hour equilibrium to be watching. Anything under 1747 is just a lower high and continued tightening range. And we could stay within this range for another day or a day and a half. But 6-hour time frame has the clarity for me on gold. Silver, a much more clear bear break. Daily time frame today, silver dropped down and tested the low of March 12th. It broke to the lowest price in 6 days. Gold dropped down to the low of Friday and didn't come near the lowest price in 6 days and not near the low of March 12th. So gold gaining ground against silver. And keeping an eye on the XAU XAG chart to determine who's stronger, gold or silver. Big green day means gold gaining on silver and trying for the first daily trend change in a while. And we've been setting weekly lower highs since COVID. And just watching for a longer term shift to see if gold is going to start gaining ground against silver. Step 1 would be breaking 68.26 to confirm the daily trend change, which would mean gold is at the strongest level, highest price comparative to silver in the last month if we can break 68.26. And why is that useful? For me, if I were a miners trader, I haven't traded the miners in a long time. But if I was a metals miners trader, I would use this chart to determine whether I'm playing GDX or GDXJ. If this chart is bullish, I want to look at GDX bullish. And if this chart is bearish, I want to look at GDXJ bullish or GDX bearish. This basically tells us when silver is stronger, we're looking at the junior miners to be stronger. When gold is stronger, we're looking at the senior miners to be stronger. The miners closed weak at the low, which is notable because the metals didn't close near the lows and neither did the broader market. So that definitely stands out. And we're looking down at the low of FOMC, low of Wednesday, 46.83 as the key short-term support from here. Keeping in mind that bigger picture, we're looking for weekly lower highs to be the result of this bounce. Oil, potential daily bear flag. We would have to lose the 4-hour higher lows with our most recent one at 60.35 if we were going to say that our daily bear flag is likely. And the bulls want bounce follow through to create the space for a daily trend change to try and set up. So at this point, it's a weak bounce. One more push over 62.04, the high, and we'll start creating that space for the trend change attempt. And again, just like XLF, we are looking for a weekly higher low to be the most likely result of this consolidation, considering we haven't seen any real weekly consolidation since 36. Natural gas bulls getting some bounce, 4-hour trend change. Again, we're holding our weekly level, 242. We bounced off 245. Anything under 2766 is just a daily lower high, so a clear daily downtrend still intact. But the daily bounce underway with the 4-hour trend change. Let's see if it can get enough follow through to try and shape up a daily trend change to make that weekly support hold more convincing. So long story short, lightening up my short exposure a bit today, but more short the financial sector than the tech sector. Other than that, it's all about QQQ and the related names. Can we confirm daily trend changes or not? Bears are top fishing those daily resistances and hoping for rejections. Personally, I don't really care which way we go. I would prefer bullish, I guess, because that means overall people are generally happier. But I'm not tied to either direction. And I will continue to day trade. Let's go. What did I day trade today? Pen oversold bounce attempt this morning. So just a drop real hard, 5-minute crushed. And it was just a bottom fishing play off of our lows. So the low of Thursday and Friday, 111.59, 112.49. So a little base of support there. And the 5 and 15-minute RSI levels were crushed as we headed to those supports. My initial entry was a little early, right around 115. My second entry was on a break of 113. And then I put my stop under 111. And that's just a little bit of wiggle room under the 111.59 support from last week. Fortunately, it held with a double bottom. And the bounce never really got me convinced that we were going to see anything. It's just continued downward pressure on the bid and ask, selling pressure. And so I sold half of my position in the low 113s, which increased my break even to mid 114s. And then I sold the second half into the afternoon, as again, the bounce was just not proving anything to me. I knew we were just looking for an hourly lower high, essentially a break-even trade. So that was uneventful. The only other trade I took today, aside from shuffling around my swing positions, was NIO. And this was a good one where it was just drop, 15-minute bounce, straight off the low. Anything under 44.56 is a 15-minute lower high. At that point in time, I was looking for QQQ to pull back to help with a 15-minute lower high because we were so extended. And that 15-minute lower high was set at 11:20 to 11:30. And at that point in time, QQQ was right here. So all bull all morning saying, all right, give me some 15-minute consolidation to help with this NIO pullback. And fortunately, NIO didn't need that help. And I entered bearish, just top fishing. So I was watching the 2-minute time frame because the loss of the 2-minute uptrend indicates that a 15-minute lower high is being set. So again, most likely scenario, longer term time frame, the 15-minute lower high and tightening range. So I zoom in for the details. 2-minute pullback, no red flags, high or low. Bulls are just fine. And here on this 2-minute lower high, I made my bearish entry. And this is now, I'm getting deja vu of a trade I made last week. I don't even remember what it was, but it was the exact same trade with the 2-minute lower high and then bears getting follow through. So we rejected from resistance by 3 pennies. I had a really good entry around 43.80 and exited half fairly quickly just to be protective, put my stop over the high, have zero risk. and my target was 43.10. And someone asked me, how did you get that target? And honestly, it's just me visually looking at the chart. I looked at this chart, which at that point in time looked like this. I said, okay, if we're going to get a 15-minute equilibrium, where would a high or a low be? If it's in the middle of the range, I'm looking 43, low 43s, and then I just throw out the number 43.10-ish, and we would hit 43.11. So a little bit of luck. You know, I'm not nailing that level. It's just experience, knowing what the equilibrium could potentially shape up into, and it did end up forming real nice, and exited the second half of my position a little bit early, as it was lunchtime, so 43.20s. But that was a solid win, and just nice to see the longer-term time frames aligning with shorter-term time frames to give me the clues, and just a nice little solid day trade. Other than that, did end up red on the day, as metals were down, USMJ was down, and the QQQ strength offset my XLF bear. I had QQQ bearish and XLF bearish over the weekend, and they offset each other. And other than that, day trade wasn't enough to offset my other long exposure red positions. So in the end, I think I was down a half-day maker. And Friday closed the account at all-time highs, so no big deal. Make it back tomorrow. And doing what I can to trim positions a bit more, so there's just less and less exposure overnight. Just stick to the day trading. And I'll see you all tomorrow. Have a good rest of your day. Do good things. So this is how I prep beds for the spring. You can see I just let them overgrow, and these pollinators, these are all weeds, but pollinators certainly need everything they can get in the early spring, and these weeds help pollinate everything. So then I just go through and with my hands pull stuff up. I could use a hoe, but essentially you got to view the soil as its own little universe with microorganisms all throughout it, along with worms and all that good stuff. And the more you disrupt it, really the more damage you do. You definitely can add things to it to make it beneficial, but I've already done that over the past 2 years, and so at this point I'm trying to be as hands-off with it as possible. And nothing makes me cringe more than a giant field that you just see tilled and then left in the sun to bake. Because what you're doing is you're lifting up all the microorganisms from in the soil, exposing them to the sun, and then they dry out and die. So it's early enough in the spring that I'm not worried about the sun baking my soil. But if it were June right now, I would be pulling all these weeds up, and then with the leaves that I've saved into piles from last year, I would just be putting a layer of leaves on top of this that would just decompose into the soil, but it retains the moisture and it blocks the sunlight from baking everything to a crisp. So just making piles, and those will eventually go into the compost. In this bed I'm going to plant lettuce and collards and kale and all that good stuff. Pretty much my greens bed. We've got a volunteer garlic, as this was the garlic bed last year, so I'll let that guy do his thing. I'm going to plant some cilantro and dill in this bed. That's rhubarb that I planted last year, and that's a perennial, so it's going to keep coming back every year. And there's also asparagus in here that you don't harvest on year one, so hoping this year I can eat some asparagus for the first time. But there's some space in here, just plugging holes where I can fit other stuff. Do lettuce on this side, and greens on the other side. There's a toad under there. I messed up his home, so I made him a new one.